Welcome to Financial Strategies with Andrew Agemy in Connecticut and Daniel Agemy in Colorado.
AAA, I heard a story the other day, and I've heard stories like this many times, but amazing to hear what people really go through and things that we forget. So there's this investment advisor, and he has this strategy that he's using with his client, and they're going back and forth, and the client's just loving it. This isn't early 90s, right? The client's loving it. They're making money. It's going up. They're growing the portfolio. And the client comes to the advisor and says, I really like the strategy we've been doing. Do you have any books you'd recommend that I can learn how to do this? And so the advisor passes the client some books, and he starts reading. A few months later, he says, I think I got this. I'm going to start managing the money myself. And fast forward a few months, the advisor gets a gold watch in the mail. And this ex-client sends him a present and says, thank you so much for teaching me how to do this. I turned $250,000 into $1 million, and here's a present, a gold watch for you. Fast forward 6 months, and we're in the tech bubble bust, and the ex-client has lost his entire investment portfolio. I'm Daniel Agemy.
And I'm Andrew Agemy. You're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. And this is a great example of it. Green on the screen or income stream? Which would you prefer, green on the screen or income stream? Boy, he really enjoyed that green on the screen, didn't he, Daniel? When it was just green on the screen, right? It was just numbers on the page.
It's so easy to do, right? We're 15, 16 years into an economic expansion, right? We've had the money printer behind us. We've had the Federal Reserve having the markets back. Right? There's been so many different things, and people start getting euphoric about that green on the screen, right? The green stock tickers. The more aggressive you are, the better you do is the mantra out there. And NASDAQ is not aggressive enough for people anymore. They need triple leverage on the NASDAQ. Basically what that means is if the NASDAQ goes up 1%, you go up 3%. And most people are not thinking about what happens if the past 15 years
the opposite way
doesn't repeat itself, right? It's a lot like the story of our good friend, the investment advisor, and his client who understood how to make money in perfect conditions. But at some point in time, you need to get a little bit defensive and not just look at the green on the screen, because the green on the screen can be very deceptive.
It certainly can. And this just goes back to say how important it is to understand history, because history repeats itself. And it repeats itself primarily because one thing throughout history that doesn't change is people. People do the same things over and over and over again. But one time, one generation forgets the mistakes of another generation, they make the same mistakes again. Just like we said with Vietnam, we'll never enter another war without an exit strategy. And then bingo bango, we're in another war without an exit strategy. And this is important to be able to know history, because if you don't know history, you're doomed to repeat it. And that's the one thing. This guy had enough information to make him dangerous. And that's what we're often saying on this show, right, Daniel, is don't try this at home. Right? Yeah. We're educating people so that you can make good decisions, not so that you can do everything yourself. And, And so
there needs to be, there's nothing wrong with having some aggressive thing if you want to use some leverage, whatever, but you need the bumpers up like in the bowling alley, right? You need the bumpers up to protect your retirement. And it all depends on age and things like that, but you can't put your entire kid's college savings fund into green on the screen. You can't put your retirement into the green on the screen. Right. And what are we talking about here, AAA? What does green on the screen or income stream even mean? How do you like that, Ryan?
Yeah, I like that. Well, it's kind of like, are you playing the game of musical chairs, or as I like to say, musical shares? Or are you just having consistent growth, income coming in that might be kind of boring, but is consistent, right? And when you're talking about being in or close to retirement, consistency is key.
Do you know what you own? And do you know why you own it? Are you just owning it because there's green on the screen because you've seen it go up? Or do you know you're buying these investments, or your investment advisor, whoever is advising you, is buying these things because they understand the fundamentals behind it? Or is it just a momentum strategy? Everybody's doing it, therefore I must do it. Everybody's doing it, so it's good. Right. Let's go back to critical thinking. And that's what this show is about today, right?
That's what the show is about every week, Daniel. Critical thinking, right? That's the whole point. Common sense is not common anymore. So hopefully people are getting some common sense from us on the show, right? Because there's a lot of herd mentality out there, right? Just following the herd. You know, the buffaloes, they follow the herd right off the cliff. That's how Indians used to kill them, right? They'd get them stampeding toward the cliff, and they'd all follow each other and go jump off the cliff and all die. And the herd mentality can be very dangerous. And I have been all my life a certain piece of contrarian, right? I said to somebody today, I just want to know the rules so I can play by them. And the person said, yeah, so you can also break them, huh? And I was thinking, I said, no, if I know the rules, I'll play by them. But if I don't know the rules, who knows what, right? And then everybody gets bent out of shape, right? But when it comes to investing, the rules are, you got to know what you're investing in, right? You got to know your risk. You got to know the definitions. And, you know, another word for risk in the financial world is beta. And you'll hear, especially Daniel, talk about beta. And the more beta there is, the more risk there is. And the stock market in general is, right, Daniel, like a beta of 1, generally speaking. So if it's more risk than the stock market, a 2 is a much more risk than the stock market. A 0 is a huge less risk than the stock market, right? But anyway, we got so much to talk to everybody about today. You're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is green on the screen or income stream. Which would you prefer? And we're talking about risk. We're talking about reward, all these kinds of things. So a lot of people are investing money primarily in mutual funds, whether it's in 401ks, it's in ETFs, it's in other mutual funds, whatever it is. A lot of financial advisors are using mutual funds. And we have a paper today, a special report that we love to put in your hand that would educate you on the risks of mutual funds when it comes to retirement. Love to put this paper in your hand. Call us at 800-725-7616 for your free copy. No obligation. 800-725-7616. People don't know what people don't know. And we're glad you're tuned in to Financial Strategies with Andrew and Daniel Agemy. Green on the screen or income stream. People like to see that screen and like to see the numbers go up on the screen and it all looks good. But Daniel, I've come across a lot of people recently that have said to me, this really hasn't done anything for years. We've taken on some new clients that are saying that to us. And I said, well, that's going to change. I mean, recently it was a great thing. I just got to throw this in. Recently it was a great thing. I've talked to these people. And that's kind of one of the things that they said. And their money from the time we took it on to the time we made some changes and whatnot, which was just, 2-3 months, they had, forget exactly, but they gone up probably like 15%. 10 to 15% in their portfolio just for some of the changes we had made in their portfolio. And they were ecstatic with that. And they said, well, we haven't seen anything like this in years. And I said, well, don't get used to it. It won't happen all the time, but at least that's one of the things that we're able to get, right? Because we're getting off the green on the screen, off the risk concept, and just methodically moving ahead, just moving along steady. They used to say slow and steady wins the race, but this is not necessarily slow, but it is steady wins the race.
Yeah, it brings back a lot of optionality, right?
Right.
Typically, when you are investing, the green on the screen, or we call it the hope strategy, because you're hoping it's green on the screen.
Right. Mm-hmm.
And it's euphoric when it is, but it can turn around real quick. Just like I said, there's all these people that just the NASDAQ isn't aggressive enough for them, and they leverage that up 3-to-1, which means if the market moves down 10%, you just lost 30%, right? And that's not a big deal for the NASDAQ. So it's turning more and more into gambling, but we're not as focused on the people doing the gambling. We're more focused on people who are set up to be more aggressive, set up to be in that green in the screen. They don't know what they own, Whoever put them in those investments doesn't know what they own, and it's not where they want to be. Because you and I both know, AAA, many people listening to this show, they're not as aggressive as they used to be.
Right.
They don't get the they're not looking to double, triple, quadruple their money as much as they want to protect what they have, and they want to have a good lifestyle.
Right.
They don't want to be bothered with 30% drawdowns. They don't want to be bothered with 40% drawdowns. And they're not so much interested in chasing a number, which gets people in trouble, right? And that's where a lot of people, when you were talking about, they haven't made any money, even though S&P has made money because of the momentum.
Yeah.
They might not have made money because they're jumping from one thing to the other, and then they get tired of waiting, so they jump to the next thing and the next thing. And when you invest for income, you remove that whole scenario because you're getting paid in good and bad markets. All you have to do is sit back and collect the dividend checks.
Exactly. Well, you're listening to Financial Strategy with Andrew and Daniel Agemy. And today we're talking about green on the screen or income stream. And we have a book we'd like to put in your hands today to help educate you further to be able to make smart decisions, because we believe that an educated retiree is a happy and stress-free retiree. And you don't need to know all this stuff to do it yourself, but you do need to be able to understand it to be able to make good, wise, smart decisions. And this book that we have today for you is from our friend Jeff Small, called Turning Financial Planning Right Side Up. Jeff is in an elite group of advisors throughout the nation, about 150 advisors that we share the same philosophies, input. Jeff has been and I have done several things together over the years in regard to that, and he's put a great book together that there's just a couple chapters. You could read the whole thing, or you could read a couple chapters, get a lot out of it. So we'd love to put this in your hand for free by calling us at 800-725-7616. The first 5 first-time callers, 800-725-7616 for your free copy of Turning Financial Planning Right Side Up by Jeff Small. 800-725-7616. We'll be right back after this.
Important financial questions. Are you feeling confident that you have enough money saved to enjoy a stress-free retirement?
Honestly, I'm not sure.
That's where Retirement Income Sources investment advisory arm comes in. We exist to help you invest your money smartly.
I'm struggling to accept my retirement without a steady paycheck. So can you help me invest into a profitable revenue plan?
Absolutely. We have top advisors nationwide who have a fiduciary obligation to you, helping you generate retirement income.
You're locked on to Financial Strategy with Andrew and Daniel Agemy.
Not too many years ago, Daniel, in the state of Connecticut, we have 2 casinos, and they were number 1 and number 3 largest casinos in the world. I don't know what it is, where they stand these days, but the point is that casinos have popped up all around the country with people. And so a lot more people are going to casinos, and some, they say, well, I take $100, and when I spend my $100, I'm out of there. Well, most are not that way. And then it's always funny, we could talk about casinos in a lot of different ways, but what I want to say here is that would most people, when they go into a casino and they have $100 and they go up to the table and the dealer says, hey, lay down that $100, you could lose $50. You could make $10 or $20. It could be 120, 110 you could walk away with, or you could lose 50 and walk away with 50 or whatever case. Would you take that bet? I wouldn't. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today we're talking about green on your screen, or the income stream. And AAA, it's 2 different ways of investing. I like your analogy there with the casino. Typically, people want an asymmetrical return upside. So if you can 4x your money with that gamble and you can only use $10, you put $100 down, you can get $400 or $500 and you can only use 10. Almost everybody will do that, right? But if it's the other way around, like you said, where you can lose it all, or you can lose half of it and you can only earn $10, who's interested in that?
That's the point, right? Why are they putting it down for a 10%, 20%, right? One of the things they're going in there for is for the excitement of making money. And making $10 on 100, that's not exciting. Making $20, well, that's better, but making $50, making $100 on $100, that's exciting. But like you say, asymmetrical. You make 100 on your 100, well, you could lose the whole thing. Is the risk worth the reward? Not is the risk worth the excitement of it. And that's what we have today. People are not thinking about the risk versus reward scenario. They're thinking about what they're hoping for. Hope. Yeah. And hope is not a retirement plan, right? And green on the screen, oh yeah, sure, you might see the numbers going up like he started the show off with that guy who turned $250,000 into $1 million. He was really happy until it turned until the whole thing went bust and it went down to zero. Right. That is the thing that we're trying to help people understand. Now, you ended up the last segment talking about how it's not just people who are dealing with people who want to make consistent returns and whatnot. And people think, well, I have to go for risk or I have to go for no risk. Right. And I talked with a lady the other day that we did her taxes for her, but she's going to come in and we're looking at her portfolio and analyzing it and whatnot to help her understand what she has. Because in a quick scenario, I said, you've got an issue here. You got more risk than your reward is coming. And she said, she's like, I know I'm not making much money on my money. I said, yeah, but the problem is you could have less risk and make more than what you're doing now. But you don't know it because your financial person doesn't know how to do this because that's not what they're trained for. They're trained to grow your money. And when you say, I want to be conservative, all they do know how to do is put it in something that's not getting any kind of return. And that's ridiculous too. Well, the reward is not.
It's the difference between having a dynamic plan, right, and a static plan where AI, Wall Street, all these things, right, investment knowledge says that for the past whatever years, 20 years, you cannot earn anything in income. And that's not true. They just forgot how to do it, right? But especially now, equities in the stock market are by all types of valuations very expensive. Yet people think they'll get more expensive and they don't care that they're expensive. You look at the S&P 500, it's extremely expensive and nobody really cares because people say, well, it will just get more expensive or we'll grow into the earnings or these types of things. History doesn't agree with that. What they're not looking at is there's all these alternatives. There's these non-stock market alternatives where you can get stock-like returns with much lower risk. And people will say, well, why are these available? Well, because no one's selling them. Wall Street isn't out pushing their products, right? And because of what's happened with rates, because of what Jerome Powell is doing right now with rates and where the country is and things like that, trying to combat inflation with this stuff, these things are sitting there available to people, but people have their eyes closed to them. And as the famed investor, Howard Marks, when things continue to go up over a period of time, people just start saying, risk is my friend, risk is my friend. AAA, how many times do we see this with people? They're terrified when markets are going down and they don't want to invest. But when they're up, they're saying, let's take on more risk. Let's take on more risk. Risk is my friend. Risk is my friend. Well, right now is the time to look for those asymmetrical returns or to look for those risk-adjusted returns where you can get equity-like returns by taking on half of the risk. And those are in these things that are non-stock market, folks, non-stock market, but they're income generated, income producing. They're alternatives to the market. And they're really interesting. I'm surprised that there's not more people talking about them because of the risk reward nature to them on the positive side to investors instead of what we've been talking about with those casinos where it's in the casino's favor, not your favor.
Exactly. Dan, I always think about this is not a perfect analogy, but are there Rolls Royces available? Can you buy a Rolls Royce? Yeah. Where do you buy one from? Do you know where the nearest Rolls Royce dealer is? I have no clue where the nearest Rolls Royce dealer is to me. But I know they're available. That reminds me of one of our clients who knew this stuff was available, but he didn't know where he could get it until we found us. So that's the thing. Why don't more people know? Well, why do more people not know where Rolls Royce? Well, in that case, that's where the analogy breaks down, right? Because most people are not wanting to buy a Rolls Royce, right? They don't have the money to buy a Rolls Royce, right? And if you did, you'd find out where. But in this case, this is for people that don't know what they don't know. And that's why you're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is green on the screen or income stream. This father and son team come to you because we're trying to help educate people be able to make smart decisions, because we believe that an educated retiree is a happy and stress-free retiree. We have a video book that we would like to put in your hand. This is a real cool book. It's got 3 channels. It's not an 8-track tape player, but it's got 3 tracks, okay? And this will give you some education on different things. That's a whiteboard animated video with narrator that you'll enjoy. It'll be entertaining as well as teaching you something at the same time. So I'd love to put this in your hand for free. Video book. Just ask for it by name. Video book by calling 800-725-7616. 800-725-7616 for your free copy at no obligation. 800-725-7616. Ask for it by the name. Video book. Today's topic, green on the screen or income stream. And risk is not your friend. The whole idea that the market is always going to go up, well, the question is, will it for you during the time frame that you want? And we're looking at how people are just looking at the screen, seeing their numbers going up and being elated by it and being enamored by it, and not understanding where the end result could be or what it could actually do in the long run when it comes to retirement and it's time to take the money out.
Yeah. And AAA, you can try to squeeze out every little drop from the lemon, right? Right. There's a lot of uncertainty in the world right now. There's wars going on all over the place. There's people dropping bombs on other people. There's a lot of uncertainty in the government. They're having hard times getting simple bills passed. They can't cut spending. Like there's, no matter what side you're on, there's people that our government's out of control with the spending. Right. We spend $2 trillion a year of money we don't have. And that doesn't look like it's going to slow down. Right. That does not look like that's going to slow down. So there's a lot of uncertainty, and yet somehow markets are still at all-time highs. Does that sound prudent? Does that sound wise? So we talk about that and we say, well, that's not that big of a deal because there's still a lot of hope. There's still a lot of euphoria out there, which means we could get another run up. Maybe we'll get another 25% run up. Maybe we won't. Right. But the question is, you have your finger on the trigger. You're waiting. You're watching the stock portfolio every day, and you're ready to pull the trigger if the bad happens. Right. That's a strategy. Is that a wise strategy? I don't know. Maybe you're really good at that. But are you better than the algorithms? I would doubt not. You're not as fast. Is the game that we're playing here with our fingers on the trigger to try to get out before everybody else does, is it a fair game? Absolutely not. The rules change to benefit the insiders all the time. We can look back in history and see many, many times where somebody made this amazing trade and they go back in time, reset, take the money from the people who made it so that these big firms don't go bankrupt. So I don't think that's a wise strategy on the part that you're going to outsmart Wall Street at their own game, or you're going to be quicker than the algorithms. Or there's these other things that you have to think about too. What about all the people retiring? When they start selling assets to take the required minimum distributions, or they decide, look at the income market. We can earn 6-7% without the volatility of the market. Why would we not take some of the money out of the market and put it there? When AI starts taking over jobs, AI doesn't get 401ks. Yeah. So if there's less jobs and people are not putting money into 401ks, where's the money coming in to drive the stocks up? Right. And that's without talking about going into recession or anything like that, right? So these are things you need to keep in mind, even if you are very bullish on this new administration and things like that. There's all these situations that are changing, and that's where that dynamic portfolio comes in, where you're not forced to follow stringent rules. You change it based upon what's happening in the world and what's happening with interest rates, not just a mantra, time in the market, the more time in the market.
Right. Strategy strategy versus plan, whole different thing. Dynamic versus static. Good stuff, Daniel. And we're talking about the game is not fair. The game is not fair. You can't beat Wall Street at its own game. You might be able to join Wall Street, but you can't beat them. And, what is the game? The game is a game of musical chairs, or shall I say musical shares, right? And when the music stops, somebody's going to be without shares. And you can bet it's not so likely to be Wall Street. It's the guy who is out on his own. And Wall Street, they do all these things. Not only are the algorithms there, Daniel, but they move their offices closer to the sources, right? So that they can have a millisecond quicker trade than somebody else, and will help them to do that. And so people that think that they have their finger on the trigger, they're just fooling themselves. You're listening to Financial Strategies with Andrew and Daniel Agemy. This father-son team come to you to be able to help you, educate you, to help you know what you don't know. Today, what we'd like to offer to you before we go to another break is a lot of people I hear all the time are asking the question, can I retire? When can I retire? It plagues people's minds. We have an analysis that can help people understand when they can retire, if they can retire. And when it comes to income, when it comes to retirement, you need income. And we are one of the absolute best at creating the most amount of income for people. So if you can't retire according to your financial advisor's advice, well, let's get a second opinion, because maybe others have better tools in their toolbox. And so we'd like to offer you a free, no obligation consultation where we can help you understand what you can do to know if you can retire or when you can retire. And you can have that for free, no obligation, because you're a radio show listener, at 800-725-7616, 800-725-7616, or you can book yourself an intro call on our website at agemy.com, agemy.com. The two words, spell our last name of Agemy.com, and we can book yourself for an intro call, and we can talk about when you can retire or if you can retire. All right. We'll be right back after this. Call us now, 800-725-7616.
Time for some tough questions for these financial advisors. What makes Retirement Income Source different from other financial?
Our extensive experience generating investment income quickly so you can have financial peace of mind, navigate your retirement smoothly, and have more time to spend with family and doing the things you love.
We gotta talk to these guys. We're done here.
This is Financial Strategies with Andrew and Daniel Agemy.
Not so long ago, we received a call from somebody who was talking about, and they were bragging about how much money they were making in their 401k and with some of their own personal investing, because they were taking tips and trends and different things with their investing, and the market was going up. And then February 19th happened, and the market started coming down. They were just thinking the greatest thing since sliced bread. But when the market started coming down, when President Trump discussed his tariffs and brought those tariffs out and whatnot, and the market didn't like that, well, it was a different story. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. And today we're talking about green on the screen or income stream. And AAA, this show is all about, do you know what you own and why you own it? You're absolutely right with that story. It was pandemonium. When we got into April especially, right? And a little secret for everybody out there, the Federal Reserve and the administration didn't really care about the equity market until the bond market went haywire. And when the bond market went haywire, that's when all of a sudden these announcements started coming out. We're making deals. Oh, we're going to be easier on China. Oh, this, because the bond market cannot, if the bond market breaks, everything breaks. So that was a little secret out there for folks who are watching, that they don't care about the stock market anymore. They care about the bond market, this administration and the Federal Reserve.
Let's just talk about that real quick for our listeners, Daniel. Why is that the case? Well, because the bond market is our loans. There are loans that are being made, right? The government, the debt that the U.S. government, that the government has is loans. They've issued bonds, and China and India and these other places, these other countries own our bonds, own our debt. So when the bond market breaks, then the debt is breaking. And when the debt breaks, everything breaks loose.
Well, collateral, the whole financial system is based on that. And the other thing is that $2 trillion that we spend as a country every year that we don't have, if the bond market's broken, they can't issue that debt. There's nobody to buy it. And so they can't issue that $2 trillion. And that's why the bond market is so important. And so the Treasury Secretary, Scott Bessent, when he saw that, he said, we have to make some changes here because we will not be able to finance the government if we cannot issue bonds. And that's when things started, the tune started changing and markets turned around. But the mantra is the Fed has my back, the Fed has my back, the Fed has my back. That was a little peek into how the sausage is made, that the Fed doesn't have the stock market's back. This time it worked out where they were able to save both, but they're interested in the bond market this time. Whereas I would say Trump 1.0, the stock market was the big concern. This 2.0, the bond market is the big concern.
And that's a great thing because the green on the screen is the 1.0 and the 2.0 is the income stream kind of thing. So it's a great division between those two, right? Which one would you rather have? Well, the government's focused right now on the income stream and on the debt rather than the equity markets. And so people need to pay attention to that. You go, and the bond market always gets poo-pooed by the media, right? And when do you ever hear bonds are good? Hardly ever. But do you hear that this is not a good time for bonds? Often. And then and you and I both know how that all works and what's behind that, which maybe our listening audience knows, or some people do or don't. But it's all smoke and mirrors when they're talking about that stuff, right? Because if you own the bonds, it's not a big deal. It's a great time to buy the bonds when they say bonds are bad, right?
What is that quote? Charlie Munger used to say something about, you show me the incentive and I'll show you what people will do.
Right. Good stuff. Yeah. We're talking today, we've been talking a lot about the green on the screen and the aspect of people wanting to make money on their money. But I think we should talk more, Daniel, about the income stream, right? And how people can get an income stream and what the income stream does for them and the consistency of that and how it can change their lives.
Well, AAA, perfect you brought that up because we are giving a beautiful report we put together away today. That's exactly that. Income generating investments. These are alternatives to the stock market.
Excellent. That's right. Took the words right out of my mouth. We got this report. We'd love to put it into your hand that will help you understand that how the income stream works. And these are investments that are out there. They've been out there. It's what people did in the 50s, 60s, and 70s. And then when the stock roaring 80s and 90s took off, all this stuff went to the wayside, but it's still very prudent, very practical for people in and close to retirement. And we love to educate you on this stuff. So you can call us for a no obligation report. Call and ask for it by name. Income generating investments. 800-725-7616. 800-725-7616. 800-725-7616 for your free report on income investment options for free. You listen to Financial Strategies. That's Andrew and Daniel Agemy. And today's topic is green on the screen or income stream, which will be best for retirement. And because people don't know what people don't know. I mean, Daniel, in retirement, what do people need? They need income. It's not that they need $1 million, $2 million, $5 million. They need income. And that's why for retirement, the income stream is huge, because if the perfect definition of retirement is having more than enough income to do all the things and more that you want to do in retirement for the rest of your life, right?
Yeah, exactly. And there's important things to consider, right? When if you're in retirement or you're thinking about retirement, typically the answer is, well, you need more money. You want more money. You need your money to grow so you can do these things. But you need to think about really 3 very important things, right? What do you want your lifestyle to look like? Are you going to need any big lump sums during it? And do you want to leave legacy? Do you want to leave money at the end of your retirement? Or do you want to just take care of yourself and make sure that you have the right retirement, right? And you need to answer those 3 questions. And the answer isn't just try to squeeze out as much growth as possible, because as we all know, growth can turn into a loss real fast if you don't realize it. And if you're taking from principal to support your lifestyle and your principal goes down or you don't realize the gains that you have, the principal might not be there, or especially not in the amount you were imagining would be there to meet your income needs, right? AAA. And so when we're talking about income stream, we are looking at things that pay you. So these are typically less risky. They're non-stock market, income generating alternatives. They're less risky, so your principal is not at as much risk, and they pay you. So even if there is volatility in the portfolio, you still earn the same amount of money. Now, with our clients, we never want to see their accounts go down, right? There can still be volatility, and we understand, and they understand there can still be some volatility.
But it's not
volatility
huge.
becomes your friend if you have income, because you always have money that you can either collect it and keep your lifestyle, or you can reinvest it in the same things that you love, the same things that are paying you income, except now you're buying them at cheaper prices, which means your income, it doesn't just grow, it compounds and it exponentially grows.
Daniel, recently we got a call from one of our loyal radio listeners who said, they put himself on our calendar for a meeting, and he said, when I asked, what do you want to meet? He said, I want to buy chickens so I can get more eggs, right? And that's what we're talking about. So the analogy that I use, right, is that we like to buy chickens because in retirement, you need to eat. And if you're buying roosters, which is or green on the screen, you have to kill roosters. And if you kill too many roosters, you could run out of money, like the guy with the $1 million that turned into Zip. But if you're buying chickens and you only eat the eggs, you'll always eat in retirement. So here's the idea. If we buy chickens and we get eggs. Now, if you don't need the eggs, what do? We buy more chickens with those eggs. We buy more chickens. What do? We get more eggs. And if we're able to buy those chickens, if those chickens get skinnier and the account value goes down, well, that means the eggs that we're buying the new chickens with, we're buying new chickens, skinny chickens that are on steroids. So instead of getting a 5, 6, or 7% egg, you're getting a 7, 8, 9% egg, and the chicken will become full size at one point, and we get growth out of that. What is better than that? Boy, I love that. That's consistency that people don't understand today. And it just goes back to what many people in our listening audience are baby boomers. You may have heard from your parents, don't spend principal, spend interest, not the principal. And that's what we're talking about. The eggs are the interest and the dividends so that you don't have to tap and dig into principal. It's a beautiful thing. Beautiful.
You know, AAA, when you're talking about chickens and eggs, there's one more part to it, okay? So bear with me here. We're going to add the active management part into the chickens and eggs. All right? So you just explained how the income model works, but now we're going to add the active management part to that. So now you're feeding those chickens and they're growing and they're getting fat. And they can't get any fatter. That's as fat as they can get. You have the choice. You can sell those chickens, take the money and hold it on the sidelines until the skinny chickens are available again. And now you sold one chicken when it was fat because it's going to get fatter. People are excited about it. Yeah. And now you hold it on the sideline if there was no chickens available, skinny chickens. And when they all become skinny again, you buy 3 or 4 for the same price. You sold that one fat one because you're using euphoria to take advantage of what's going on. And that's kind of if we throw now you got 3 chickens for the price of 1.
Yeah, and you know what else? If you get 3 chickens for the price one, you know what else you get? You get 3 times the eggs.
Exactly.
As you did with that first one, which means your income goes up. It means that you have more money in retirement to spend more on your kids, on your boats, on your retirement homes, on your cars, whatever you want to do with that money. I love it. I love it. All right. Well, you listen to Financial Strategies with Andrew and Daniel Agemy. Today's topic is green on the screen or income stream in your retirement, which was better. And people don't know what people don't know. So we love to educate you. And it's about time for us to take another break. And what we want to do before we go to break is give you the opportunity to get a free video book. We have this video book that's 3 channels, plays 3 different short videos. They're animated videos that educate you on how these different things work, whether it's Social Security, it's required minimum distribution planning, it's income investing. We have several different tracks that we can give to you. We'd love to be able to give you this video book for free. Ask for it by name, video book, when you call 800-725-7616. For the first 5 first-time callers, 800-725-7616 for a free video book. Ask for it by name, video book, 800-725-7616. Call now. We'll be right back after this.
Do you have any questions for me about retirement income source?
You know, I just want to make sure I can invest well enough to have enough income, enjoy my retirement.
We build a custom retirement plan based around your income and goals.
How do I know I can trust you?
Building trust does take time, but our investment advisory arm is comprised of fiduciaries, which means our obligation is to you, so you can enjoy your retirement with a little more income stability.
I'm in.
That's 2 out of 3.
You're locked on to Financial Strategies with Andrew and Daniel Agemy.
AAA, I was talking to a client the other day, and we were reviewing his portfolios, and we were talking about he's done very well with real estate. And we were talking about one of his rental properties. And would it make sense to sell this rental property and pay the taxes on it? And we went through the numbers, and we did some quick math based upon what he's currently earning in the income stream type investments and what he's getting from the real estate property. And he could sell the entire real estate, pay the taxes, and still come out with about 1.5% more per year than what he's getting on the real estate. But the bigger thing that he loved the most than the 1% was he doesn't have to do the work. He doesn't have to manage tenants. He doesn't have to do any of these things or have these unexpected expenses like property tax went up or insurance went up or this broke or that.
HOA or whatever. Yeah.
I'm Daniel Agemy.
And I'm Andrew Agemy. You're listening to Financial Strategies with Andrew and Daniel Agemy. And today's topic is green on the screen or income stream. And because people don't know what people don't know, and we love to educate you to maybe make smart decisions. Daniel, that's great, man. I was really involved with that. Yeah, there's so many of those expenses that go up with real estate. I talked to somebody else that they're getting less. It's just crazy what the real estate market where it is. And I think you've told me that Denver is right now like the top real estate market in the nation as far as cost goes. And
it's the most expensive. It's the most expensive in the nation. Now, that's not in nominal terms. That doesn't mean that the houses here are more expensive than LA. But what it means is based on the inventory coming onto the market, the cost of living, all of those types of things, because of where the pricing is, it's the most expensive, which is more than Miami, more than Florida, more than LA. It's crazy. It hit number 1.
Yeah. So you real estate investors in Denver, take note, because you could be making minuscule money now on what the value of your property is. And even if you have $1 million property and it's all been depreciated and you sell, you go, I'm going to have a lot of capital gains. Yeah. But if you have to pay capital gains tax, federal and state, on $1 million and with zero cost basis, it's all been depreciated, you still turn out with $700,000 that could be invested at and being able to make somewhere in the $40,000 to $50,000 range or so of income that you would be getting without doing the work. that you're involved with now, and not without having to worry about taxes going up and other things. But anyway, that's another form of income stream, right? Real estate investing is an income stream. But the question is, again, is the risk, is the output worth the reward, right?
Exactly.
And yeah, exactly. So good point, Daniel.
That is one of the income streams, right? That is one of the non-stock market income generating types of investments is real estate. But it goes back to, do you know what you own and why you own it? Does it still make sense? Each investment, each thing we talk about, you need to see if it still makes sense. If you're only earning 3.5% on the value of the investment, you could double that, right, by liquidating it. There's people who still own bond funds, for example, that are paying 3.5%. It's less than if you put it in a treasury note. It's like, how does that make sense, right? For like international bonds or something like that, and you still have duration risk, you still have all this stuff. It doesn't make any sense anymore. But like, these are these old and static portfolios that there's a mantra that people are following, a mantra instead of real life. Do you want your portfolio, do you want your retirement based on a mantra that's been passed down from advisor to advisor or investment firm to investment firm? Or do you actually want like a boutique portfolio built for you and what's important to you?
And not to mention wholesale. To me. Yeah. Well, not to mention wholesale, right? Most people are getting retail and paying big dollars for retail, but our clients are getting wholesale because they're coming straight to the investment advisor and who's managing the money. So it's really interesting how that whole thing works.
Yeah. So what do you mean by that? Because people may not be familiar with the wholesale and the resale. So the retail, I should say.
Yeah. Well, it's like this, Daniel, right? Is that most people in our listening audience are not going to pay somebody to find them a mechanic to work on their car. They're going to find their own mechanic, right? But that's in actuality what a lot of people do with who they call their financial advisors. They think the people are managing their money, but all they're doing is finding them somebody to manage their money, and they're paying them the lion's share. Him or her, the lion's share, typically, maybe 1%, up to 1.5%. And then the manager who was actually managing money makes less than them. And so a lot of people I see are paying 1.75%, 2% per year for quote management of their portfolio. And it's nothing special. It's mutual funds, generally speaking, in one form or another. And
so you're saying basically that an example would be you have an investment portfolio and you have an advisor and you pay your advisor 1.25 or 1% or whatever you're paying that advisor. And the advisor helps you with these things, but the advisor is not actually managing your portfolio. They're having CFAs manage the funds, and you're not getting that for free. They're also charging you 1 to 2% for those funds. And so you're saying you're paying two people to manage the money, but you don't see that. You just see it as you're paying your advisor. Whereas if you go straight to the CFP or CFA, or you go straight to the certified portfolio manager or the investment manager, and they're managing it, there's just one fee involved.
Exactly. And when you buy wholesale, why do people go to BJ's and Costco and everything? Because it's wholesale, right? And they get things cheaper, right? When you get things cheaper, it means more money in your pocket, more for you. And I'm not against fees. I'm just against egregious fees. We charge fees, but we charge wholesale fees. And so that is huge, right? But you're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is green on the screen or income stream. And it's one thing to be able to have the income. It's another thing for what the fees are you're paying, because the more fees you pay, the less income that you get, right? But today we have something that we'd like to give for you. And this is a book written by my friend Jeffrey Small, Turning Financial Planning Right Side Up, right? Jeff goes in and he goes against the herd mentality to help you look at things from a different perspective. Because once you're in or close to retirement, you need to look at things differently than you did for the past 30 or 40 years while you're trying to grow your money. Because now that you're going to try to start distributing the money, taking the money out, you have to deal with it differently. Because if you keep doing the same thing, same way, expecting different results when you take the money out, you're going to be disappointed. So Jeff does a masterful job with writing this book in regard to this. And I think most people love this book. If you're an engineer, you're really going to love this book. And you can have it for free for the next 5 first-time callers at 800-725-5555. 7616. 800 725 7616. 800 725 7616 for the next 5 first-time callers. Call now for that book, because people don't know what people don't know. Green on the screen or income stream. Daniel, we don't have that much time left in the show today. And we've been talking about this income stream, the green on screen. A lot of people are in the game of musical chairs or musical shares. And when the music stops with the stock market, they could be without a seat. They could be without money that they have invested. But this steady, constant income stream from bond and bond-like instruments that pay interest and dividends can make all the difference in the world of somebody's retirement, right?
Yeah. Yeah. It's about, are you going to live your retirement off of your principal? And what I mean by that is you're hoping that things will continue to grow so you can sell shares to support your lifestyle. Or are you going to look at a different model? Are you going to look at a model that you can still have some growth, but it pays you? It pays you in ups and downs, in sideways times. And if you don't need any of that money, you reinvest it and you get growth. It's just like a renewable resource instead of just hoping that things continue to go up. So I guess what we need to ask ourselves, what people need to ask themselves, listeners, ask yourselves, are you playing musical chairs with your retirement savings? Are you a speculator? Do you want to be speculating with your retirement? Or do you want a more robust and certain retirement? Right. And do you know what you own? Do you know what you own and why you own it? That's got to be a big consideration here. Why do you own what you own? Does it still make sense from when you bought it? Because it might have made sense. We see this all the time. We'd like to do these asymmetrical returns, right? Where we have this steady, robust portfolio that just pays you, but then we see these opportunities where we see it could do multiples. It could just do multiples. Right. And some people want to add that to their portfolios, but then they get to these prices where we're like, these are just insane and we have to start taking profits. The original outlook changed. So maybe you've done that yourself. You're sitting there, you're listening to the show, you're thinking you've already done that. You did that with certain investments. You're already rich. Did the thesis change? And now it's time to get into a more, I'm going to protect what I have and generate enough lifestyle chips to have the lifestyle that I want to have? Or has it not changed and you still need to be, it's still going to the moon, right? But that's an individual case by case thought process. And I would encourage everybody listening to look at that. And if you need help, you could talk to us, you could talk to your advisor, you can talk to somebody, but you need to internalize that first and make the decision you're first if you're where you need to be.
And if you need help in trying to understand that, define it, that kind of thing, that's what we're here for. We'd love to be able to help you work through that, coach you through that process. Daniel, you're so right with that, because people don't understand how they need to reevaluate things from time to time, like wills and trust. You need to reevaluate those from time to time, right? You need to do beneficiary chain audits on your accounts, because how many people do we know that, and have we come across who they got divorced and they never changed their ex-spouse, and they die and their ex-spouse gets it, right? So from time to time, things change, so we need to review things. And when you're talking about this, Daniel, I just want to add that that's where I call a second opinion or a free the free MRI, financial MRI, comes into play, right? Because it looks at those different things, where asking you what your definitions are, finding out what things are so that you can know what you don't know, so that you can have clarity, so that the people in our listening audience can make the decisions that they need to make, wise, smart decisions. And if you're that way, if you don't know if you can retire or when you can retire, or are interested in a a free second opinion or financial MRI, we love to offer that. So glad you're listening to us at Financial Strategies with Andrew and Daniel Agemy. Love to be able to offer you our opinion on that, to be able to recognize if you have financially cancerous cells within your portfolio that need to be dealt with. Maybe some chemotherapy, maybe some surgery, whatever the case may be. But if you don't know that they're there, you're gonna find out when it's too late. You can call us for 800-725-7616 and ask for a meeting an intro meeting that we can talk about this, to be able to help you understand how you can get a free second opinion on what's going on in your portfolio. Or you can book it yourself on our website, agemy.com, agemy.com, intro call, to be able to have this conversation with me, to be able to understand where you stand in your portfolio. Well, it's been great being with you today. Today's topic has been on financial strategies with Andrew and Daniel Agemy. Green on the screen, our income stream for your retirement. And would love to be able to see you again next week or talk to you again next week. I love to have you calls because I love being able to interact with our listening audience. Remember, until next time, folks, if you want your retirement to be stress-free, invest for the I more than the G. See you next time.